The DXY or US dollar index is a measure of the value of the United States dollar relative to a basket of foreign currencies. It is one of the most widely recognized indicators of the dollar's strength or weakness in global markets. As you are aware, interest rates and tariffs can have a substantial impact on the US dollar index, DXY, which tracks the value of the US dollar against a basket of foreign currencies. Why is the DXY important? First of all, global benchmark. The DXY serves as a key benchmark for measuring the dollar's strength in international markets. Second of all, impact on trade and investments. A stronger dollar, higher DXY makes U.S. exports more expensive and imports cheaper, affecting trade balances. It also influences global capital flows, as investors often flock to the dollar during times of uncertainty. Third, correlation with commodities and cryptocurrencies. The DXY frequently exhibits an inverse relationship with commodities such as gold and oil, as well as cryptocurrencies like Bitcoin. Generally, a stronger dollar, higher DXY, tends to result in lower prices for these assets, while a weaker dollar, lower DXY, often leads to higher prices. However, this relationship is not always straightforward and can produce more complex outcomes depending on various economic and political conditions. As a result, we will discuss more about this key point in this video. On the other side, the policies announced during Donald Trump's presidency also can play a significant role in influencing the DXY. Given this, it becomes crucial to analyze how fluctuations in the DXY might affect the Bitcoin and cryptocurrency markets. Understanding this relationship can provide valuable insights into the broader financial landscape and the interplay between traditional and digital assets. In this video, we aim to provide a unique analysis of the Bitcoin market, investigate the reasons behind the recent crash, and determine whether, based on the DXY index, the market will continue its downward trend, or if this was merely a correction before resuming its upward trajectory. If you're interested in exploring this critical topic, make sure to stay with us until the end of the video. Now, first of all, before diving into the details, let's analyze the Bitcoin market from 2012 to 2025. As you can see, there's a long-standing historical channel within which Bitcoin has experienced significant fluctuations. So far, Bitcoin has touched the upper boundary of this channel twice at its historical all-time highs, which we observed in both 2017 ATH and 2013 ATH. On both occasions, Bitcoin managed to reach the upper line of the channel but faced strong rejection, encountering heavy resistance at that level. After hitting this resistance, the price reversed direction and moved toward the lower boundary of the channel. Since January 2023, Bitcoin has been struggling significantly with the lower line of this channel. As you can see here, there's also a smaller channel where Bitcoin has repeatedly tested the lower boundary of the larger historical channel. This month, we've witnessed a notable decline in the cryptocurrency market. The key question now is, given the current conditions, will Bitcoin continue to decline, or is this just a temporary setback? To answer this, let's examine the DXY indicator and its correlation with Bitcoin, but in a way you've never seen before. We wrote the correlation between the DXY indicator and the price of an asset in the form of a Pine script in the TradingView environment. We customized this code so that instead of calculating the correlation directly on the DXY and the asset price, it first applies a moving average to both of them. This averaging is done to reduce noise and smooth out the fluctuations that occur in the two signals. We incorporated this as a parameter in the program, along with an adjustable window that allows us to set the number of samples needed to calculate the correlation between the DXY and the asset price. As you know, correlation is a number that ranges between -1 and +1, and the levels of change here are usually meaningful. We have included a table as a guide to explain the colors used. For example, the red color represents strong negative correlation, equivalent to -0.7 to -1.0, while the orange color represents moderate negative correlation, ranging from -0.5 to -0.7. The white color indicates weak correlation, no correlation, or neutral, covering the range of -0.5 to +0.5. The blue color represents moderate positive correlation, ranging from plus zero point 0.5 to plus zero point 0.7, and finally, the green color represents strong positive correlation, covering the range of plus zero point 0.7 to plus 1.0. Now you're observing the correlation between the moving average of the DXY indicator and the moving average of Bitcoin's price. As you can see, despite the common assumption that Bitcoin usually has a negative correlation with the DXY, we observe that Bitcoin can not only have a strong negative correlation and a moderate negative correlation, but it can also be neutral. At the same time, in some parts of this chart, you can see that Bitcoin has also exhibited strong positive correlation and moderate positive correlation. A golden insight that can be gained from a meticulous examination of this chart is that we have repeating cycles of colors, meaning we see a sequence from green to red, and then this cycle can repeat. Of course, we need to discuss this point in more detail and more precisely, which we will definitely cover later in the video. However, to adjust this so that we can get better output and avoid sensitivity to short-term and medium-term market changes, we need to select a larger time window for our analysis. It is enough to come here and choose a large number for the correlation window, for example, 1 year or 365 days, so that it calculates the correlation for 1-year markets. We also set the moving average to 14 so it can calculate the average over 14-day periods. We no longer need this guide table, so I will remove it and uncheck the table option so that it is no longer displayed. As you can see, we now have this indicator, which calculates the correlation between the two signals over a 365-day window and returns the results to us. A very interesting point that can be discovered in the correlation chart between Bitcoin's price and the DXY is the repetition of these color cycles. Here, how do we define a complete cycle? Ideally, a cycle is defined from the start of the green zone to the end of the red zone, provided these colors form the start and end of the cycle. Otherwise, the start of the blue zone and the end of the orange zone can also define the start and end of the cycle. In other words, the end of the time zone can be orange, provided that after the orange the red color does not form and instead the white color appears. Similarly, the start of the cycle can only begin with the blue color if the green color does not appear after the blue. Okay, now let's move to the first cycle on the chart at the beginning of the historical channel. Our first cycle on the chart starts in July 2013 with the green color and ends in June 2014 with the orange color. In this cycle, the red color did not appear, so the end of the orange zone is considered the end of the current cycle. As you can see, this cycle lasted approximately 299 days, and during this period, Bitcoin's price experienced an overall upward trend. A very important point is that after each cycle, the market follows the opposite trend of that cycle. In other words, the market chooses the inverse trend of the previous cycle. Therefore, since the overall trend in the previous cycle was upward, after this cycle, the price should decrease in a downward trend, which, as you can see in the chart, is exactly what happened. After this cycle, Bitcoin's price dropped by nearly 74%. Okay, that's for the first cycle. The next cycle starts in January 2017 with the green color and ends in December 2017 with the red color, forming a complete 323-day cycle. You can see the full sequence of green, blue, white, orange, and red in this cycle. In this cycle, the price is strongly upward, so we expect that after the cycle, the market will take a downward trend. You can see that the signal at the end of the current cycle clearly revealed the 2017 ATH, and after that, Bitcoin's price dropped by nearly 85%. Now let's move to the next cycle. The next cycle, which dates back to September 2019, starts with the blue color and ends with the red color, lasting 533 days. During this period, we also witnessed the COVID-19 phenomenon. The overall trend here is upward. Despite the severe price drop during COVID-19, where markets experienced a terrible crash, the overall trend in this cycle is upward. Therefore, at the end of the cycle, we expect a decline. As you can see, after this cycle, there is a 54% drop in price, and here again we see one of the all-time highs being revealed by this method. The next cycle dates back to November 2021, starting with the blue color and ending with the red color. In this cycle, the trend is downward, so we expect an upward trend after the cycle ends in March 2023, which as we can see has happened, and the price has increased by 293%. Now let's get to the most sensitive part of our analysis in this video. Okay, in January 2025, we are once again experiencing a new cycle for Bitcoin's price, which has started with the green color. If we take the average duration of the previous cycles, we can expect this cycle to last approximately 376 days, give or take a year. Now the question here is, will this cycle be downward or upward? If this cycle is downward, then we should expect a bearish market until January 2026, which is roughly 376 days. However, if the trend in the current cycle is upward, we can expect a bullish market during this time frame. Here, key levels on the chart are crucial for us. It seems that these two levels we have here are very decisive. One is the latest ATH. If the trend reverses upward and breaks through this resistance level around 108,000, we can expect this cycle to be upward. However, if the 72K level is broken and the historical channel we discussed is also broken, then unfortunately we must anticipate a bearish market for Bitcoin lasting almost a year. Given the current market sentiment and negative news, this scenario seems more likely than the first one. However, for now, we must wait for further confirmations. So, if you want to receive our latest updates, make sure to subscribe to our channel and hit the notification bell so you don't miss any of our videos. Thank you for your support.